in line with getting some of the biggest market voices all through this week. We have one more. Prateek Agrawal, MD and CEO of Motilal Oswal Asset Management, joins us right now on the show. Prateek, thank you so much for taking the time out and being with us. Really appreciate your time. At the outset, Prateek, we want to spend some time on this big development or a big meet that happened between Prime Minister Modi and US President Donald Trump, right? The initial takeaways seem to be placid, maybe even mildly positive. What have you made of the impact of all that's happened around tariff wars and the meet between the two head honchos?
Frankly, talking of it, personal point of view, I've been very positive. See, one has to realize that America can't make everything on its own, because while they may have a lot of land and they may have all the best technology of the world and all the best raw materials of the world, they don't have people. Okay, and we are seeing them send out people rather than get in people, which means this lot of this is posturing, to my mind. Now, posturing is against China because that is a country which is probably competing neck to neck with them uh, on another scale actually. So one, there can be a revenue thought that, let's levy duties. We have to import anyways. We get some money in. That money will be good to save taxes. The other bit of promises, I'll bring down personal taxes. I'll bring down corporate taxes. So, it helps support that. But here, if the main competitor is another country, more would be levied against that country, and others would get a better access to the US, which frankly others should be celebrating and not be worried about. I think what is happening just now is that because of the uncertainty, we are seeing people park monies back in the safe asset. So your DXY from 105, 106 has moved to 110. Maybe it's coming down a bit because the risk aversion is so high. If it drops, I think a lot of it is actually pretty good, positive for us. Uh, my sense is budget was on the margin good for consumption. I think the outcome of India, US would be very positive for Make in India kind of initiative. So we have a lot to look forward to. Now, the other thing is we as an economy is very diversified. So if somebody levies a tax on all, let's say, base metal imports, okay, it means manufacturing in the US of the use case of that metal will become more expensive. So you increase duties on aluminum, cables get more expensive, and so on. So which then gives a leeway to Indian producers of those commodities to export more. It's just that let it settle. My thought still is it's going to be positive, not negative, because the base case is the focus is somewhere else, okay, which would mean that everybody else should get a better access to the largest market in the world, which should benefit us.
Right. Pratik, an interesting point that you made with regards to it benefiting us, because clearly I was just looking at India's trade surplus with the US. It's the lowest compared with other Asian peers, right? We're sitting at around $46 billion.
Yeah, absolutely.
Right. And if you talk about the weighted average tariff rate as well, imposed on US imports by India is 8.5% versus, tariff rate imposed by US is around 3%. Now, if you have to take both of these into consideration and do the math, which sectors then do you think will be key beneficiaries? Because it's clearly China, which is sitting at the top at $295 billion, followed by Mexico, Vietnam, Taiwan. So where would you put your bets if you have to play this now?
No, so when there is uncertainty, see, just look at it. You are an industrialist, okay? You're trying to put up a plant. Now, earlier people would put up a plant in this part of the world targeting another country, say the US, because here, let's say, labor is cheap. Okay, now this activity would be fraught with risk. There is uncertainty in the air. Now, the new thing would be to put a plant in a country which can satisfy, let's say, 60-70% of the overall capacity, and you are searching for a market for the rest of 15-20%. Right? Indians do that. And hence, for an Indian entrepreneur mindset, this is very good. Rest in the, let's say, the ASEAN, where domestic markets may not be so large and export is a large activity, have more to worry versus an Indian entrepreneur who is putting capacities in India, basically targeting Indian markets and looking at others for some small surpluses. This is exactly what we want. You should actually, instead of speaking to us, you should speak to a variety of industrialists. Do they
No,
sense an opportunity or not? I would believe they are all excited. That excitement should come to the channels, to the public. It's not negative.
noted. Okay, so in light of that, Prateek, then, how are you guys thinking of the market texture currently? I mean, earnings, the way they have turned up, you can argue that the Nifty earnings with that 7% growth isn't top quartile in terms of expectations, other forget the delivery, right? So 9 months now, we haven't had a great year. Does this year pass off with 3% and do expectations move to FY26? And are those reliable at 15%, or do you think they'll be scaled down?
No, so when you start a year with a lot of assumptions. Now we have the benefit of the budget, so we know, revenue side is assumptions as it would happen over the years. The expenditure side is probably more cast in stone and would happen. There, very clearly, the government expects the private sector to take up the baton for capex. Now that remains to be seen. So, point is, overall, when there is fiscal consolidation, private sector has to come up and take the slack, else there would be some slowdown versus expectation. So that is the thought. In that context, maybe the 14-15% earning uptick that people are talking of has less chances of being realized. But one has to caveat it. A lot of that increase is on account of reversal in commodities. Commodities had a tough year. On that base, maybe they have a better year next year. But that number can keep being very, very volatile. Now, this is as far as the legacy businesses are concerned, which is what the index is today. Uh, Today, as we speak, is one time in history when there is a sizable part of the economy which is not there in the index and doing very well. I keep saying this, just like software emerged as a strong industry in the 90s and continued to grow for a very long time. Just look at the number of industries which have happened over last 5 years. It could be renewables, it could be hospitals, it could be, capital marketplace, etc., 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 where, the earnings growth in this quarter, the last quarter, expectation for next quarter, expectation for next year is an order higher than that of the indices itself, which people keep focusing on. And if one follows the thought that market follows earning growth over a period of time, these are the spaces to focus on. This is where the growth lies, and not for 1 quarter, 2 quarter, but for a few years.
Okay. Okay. So selectively constructive, Prateek, would that be the way to assess how you are thinking about the market currently? Very, very bottom up, very, very specific, maybe not even sectorally.
if I have to broad brush it a bit, I would say focusing more on newer spaces, which have been brought to the market over last 4 5 years versus the old legacy spaces.
Okay, and does that therefore, Prateek, just wondering, the overarching consensus on markets currently is that BFSI and large banks arguably look the safest bet, earnings valuation combined, but that's as old can get. So I'm not saying you are excluding all of old, but I'm still trying to think that would you be relatively underweight large banks versus the weightage on the index?
No, we are. We have been that way for a long while. We have said that whatever is happening is positive banks, is positive large IT. But then both of these spaces will deliver earnings just about indices or lower. We are a growth focused house in terms of our investing philosophies. We typically should not be expected to be in spaces where growth in earnings is going to be index or lower. We should be expected to be in spaces where growth in earnings is expected to be significantly higher than that of the index for let's say 2 to 3 years time period. So yes, short answer is we are underweight all of these spaces by quite a bit.
Okay, so significantly underweight with regards to BFSI. The other space, Prateek, that you have been staying away from or probably have got down your exposure is with regards to government capex driven sectors, right? From there, we've moved in the budget to consumption with that 1 lakh crore number that would be in the hands of the consumers. How would you look at consumption growth versus value if you have to look at that aspect?
Sure. So, government capex driven sector. So we had some small exposure to railway space. We don't have that anymore. As far as consumption goes, luxury consumption is something that has been a theme that the managers have been following. We continue to be positive there. So unorganized to organized shifts in consumption on the retail side, let's say, luxury is something that we like. We don't like staples because we think that's a very saturated market. We like durables, luxury, let's say hotels, jewelry, travel kind of stuff, and unorganized to organized, so retailers.
Okay. Okay. This is interesting because the guest who's joining in, and Prateek, if you have time, I'd love for you to stay a bit longer because I want to get in Manish Dangi in this conversation and have the conversation with two of you together, simply because Manish in a post yesterday has mentioned that he believed that by and large, while US and China were to fight this out, and Prateek made this point that the problem would be for some of those countries, Manish believed that US and China would be the least impacted. A lot of others might get impacted. And therefore, it will be a nice kind of mix of conversation happening here. Now, Manish Dangi joins in as well. Manish, good having you. And I requested Prateek Agarwal to stay on for a bit longer as we do this conversation with both of you. You made this very interesting point yesterday on your LinkedIn, right, Manish, that when the two elephants will fight, they might be the least impacted. A lot of others will get impacted a lot more. Did I get that correct? And would India be amongst the ones which, to your mind, will get impacted a lot?
Hi, Neeraj. So it's sort of true, right? These two big elephants fighting with each other. Both of them are relatively much more local economies, independent, mostly source of maybe tech and production and everything else to the rest of the world. So the impact on them would be much lesser, even though, very, very paradoxically, US's entire play is actually to hurt China the most. And China would be least hurt, and of course US would be sort of much less hurt, given the hegemonic power that they have. It is true that most other countries will be majorly affected because this, as a side, what will happen, of course, is that if US were to sort of import less, or because of higher tariffs, a lot of Chinese products would then be sold in the market and dumped rather. So to that extent, there could be a lot more effect on our economies. The only saving grace is that India also is relatively local economy. Its import export as a percentage of GDP is not as much as what you will see in East Asia and Europe, and to that extent, somewhat muted impact of India. That's the only saving grace. But I think the primary sort of point is you sort of summarized well that yes, US and China would be least affected. US's total growth impact of the oil tariffs, Neeraj, is likely to be not more than 0.5%. And it's a super strong economy right now. It can afford to do all of this.
Right. Right. So Manish, when you mentioned about, how US and China will be least affected, if you have to look at the impact in terms of India, right? How are you seeing a differential between Trump 2.0 versus Trump 1.0? Is this something which will see a higher impact, or it's just a neutral, no game changer?
No, India, every other country, see, it's a zero-sum game, and in fact, it's a lose-lose game. So, to state that any country would be better off because of this really can't make out. In long run, perhaps, I think both US and China would be sort of well off because of this. But right now, everyone loses. US and China lose less. India certainly loses. So it's not a good outcome for us that these two elephants are fighting. Trump 2.0 is certainly more ideological, certainly more powerful, and certainly much more motivated. Look at the way he's trying to burn the whole bureaucracy down. In last 15, 20 days, he's been able to achieve. To a certain extent, a lot of us voted for Modi, thinking that something similar would play out, in India as well. So, but big picture, it is pretty bad for the world growth, I think. And I don't think he is in any mood right now. And it's not about individual. I think, from a US's attempt to preserve its hegemony, it is one of the last two left to create these unnerving moves for rest of the world, and force the world to actually come to settle with their terms. Look at the point that he made with respect to BRICS yesterday also, that if you go towards making BRICS currency or any such things, we will impose 100% tariff, and we don't just care. You need us, we don't need you. So that at the surface, superficial level, looks like a very, very arrogant country. But it's basically that's the way the realistic, war games, geopolitical games are played. And Trump is, after a very, very long time, is playing that same game again because it's in the need of it. Today China has the momentum that it's not a sort of fair chance that China would surpass US in 10, 20 years in every single matter. And US wants to preserve that, and tariff is one such way of actually doing what it wanted to achieve for itself.
So, Pratik, come in. On you just heard Manish mention this as well, right? The question that comes to the optimist's mind, if you will, is that if the US is fighting that battle against China predominantly, right? And I believe that's a bit of an open secret here. It would much rather have the second strongest emerging economy out of Asia as an ally as opposed to a foe. And could that therefore be that in rhetoric, it will be equal for everybody, but, I mean, and we know the kind of, if I can use a lack of a better term, a bonhomie between Trump and Modi, that equations might be slightly better for India. So Manish is right that everybody else will hurt. Could India hurt less? And would that be taken constructively by risk assets like equities in India?
No, so agree with him on many points. So if tariffs are imposed and stuff gets expensive in the US, overall demand in the US should be expected to fall, which is not good for global growth. But at the same time, one has to understand that US is living way beyond its means anyways. So I see tariffs also as a tool to get in some money. Now, if there is a war, well, in war, there are allies, there are foes. If you think that, people are going to slug it out, they would want friends who would do some bit of it on their side. So we could be, the people who is wooed by both sides. And that can be a very happy situation. So if you see the past few months and the developments all around, we really are in a position where people are trying to have us on their side, and that can be pretty positive. I think the negative, but that said, win for India would be, significant gain in market share in the US. Only after that, we will gain, in spite of a slowdown that will be there because of increased duties and inflation and so on. So
Point well
it's
noted.
not a straight line, this thing. But
Got
I'm
it.
very hopeful we win. Any country who allies with the US does very well or has done very well, at least in the initial 8-10 years. After that, things can change. But first 8-10 years are usually nice.
Manish, how would you respond to that? I mean, and again, I mean, it's kind of weaves in with what I was trying to ask. That in some sense, India is not coming out here as a non-ally. If anything, it's India is coming out as an ally of the US. Will it still hurt bad?
See, US is actually behaving like a mercantilist nation. To think of US, see what they did to the fairness scream came to what you call Canada and Mexico first. You couldn't really imagine, something what he did to both the countries, and it's sort of likely that something similar would happen to Europe as well.
I
It's a very, very mercantilist sort of a viewpoint that that the trade is zero sum. So you could think of US being an ally in defense and such things. This is an independent policy that and he announced reciprocal tariffs yesterday. So and in the press meet also when Modi was there, he said we are being fair. Whatever you impose, we'll impose equally to you. And sort of at the face of it, US has been sort of quote unquote ideological buffoon in last, since 1990 to have been practicing this laissez-faire that anyone can come and dump anything. And therefore, that has hollowed out US manufacturing in last 30, 40 years. And of course, China has won majorly because of those policies. And so Trump is being extremely realist and simply unwinding the so-called these ideological liberal policies. And I don't think there is a case of being ally or non-ally here. Everything is a trade, and we ought to give. And we actually export a large amount. We run a $45-50 billion of trade surplus. He wants you to sort of now. Can you buy more defense? The Modi ji said yes. Can you buy more food? That will hurt our farmers, but we have no other option. And something similar will happen to a lot of Harley Davidson to a certain case is coming to you most likely cheaper sooner than later. So it is, as I said, in geopolitics, there are no friends, Chief. And my sense is that, yes, friends to the extent that if there could be a bipolarity and, US and China were to fight and, someone were to insist that either you are with me or against me, I think we will stand with US. But that's it. Beyond that, nothing much. As far as markets and economics are concerned, these are turbulent times. And I think, as I said, to repeat, that everyone is worse off in this. Least worse off are China and US. I think India is one of the better ones because not because we are allied, but just because we just don't trade much with the world,
Okay.
and that's why we are okay.
Okay. Well, so let's see if cheap Harley Davidsons come in, and if you or Prateek, Manish, were to buy one, please let us know. Would love to take a spin on your vehicles for sure. Journalist salaries don't afford a Harley Davidson.
Buy domestic brands. Everybody in the world is doing that.
Okay, maybe that too. But gentlemen, we got to wrap it up here. Thank you so much, both of you, for taking the time out.